Morning.
Today is quadruple witching for the US, and of course it's our version of futures closeout. Yesterday we had futures closeout on the South African front. Take us through the trading day.
Yes, we had a bit of activity in the day. Obviously, any futures closeout always increases volumes as basically traders try to take advantage of volatility, etc. But I've noticed in the last few periods that we've been getting a bit quieter during these actual closeout days. The reasoning being is that longer-term traders are basically easing into the period. They're doing it over a couple of days instead of basically worrying about the futures closeout day specifically. That being said, our market's stronger again. We are heading higher. We came back a little bit in the afternoon, but still we were very strong yesterday.
Of course, we do have a very strong rand at this stage, which is impacting the likes of resources and the resource companies. Your view on that? I mean, we heard the comments from Reserve Bank Governor Tito Mboweni saying that they are very attentive about that strong rand and something needs to be done.
It's very strange that the Reserve Bank Governor, the central banker, virtually says that the exchange rates are given to him. It doesn't make sense to me. But that being said, I mean, if you look at the rand, basically where it was before the crisis and where it is right now, it's still a bit weaker than where it was just before the crisis. So that may be something to think about. By the crisis, I mean not just the October number, but earlier than that. We were looking at the 6 rand level and so on, or in the 6 rand to 7 rand level, which was earlier before all this craziness started to happen. That being said, I think that the South African economy prefers a rand that's weaker than 8 rand to the dollar. However, over a longer term period, we've got to expect the dollar to weaken, maybe not versus the rand, but versus global currencies, just due to the fact that the way the US economy is set up at the moment, they're basically a country that's borrowing more than they, spending more than they earn. They're a country that basically is borrowing to basically finance government spending. All these things are quite negative for the long-term currency strength.
I spoke to Yanda Olifant from Standard Bank yesterday, and I asked her the exact impact that it's going to have on the manufacturing sector, and of course this regarding our exports as well. And she said there's quite a big lag, and by the time that the strong rand actually impacts those exports, we should be well on the path to recovery, so we won't really see such an impact. Do you agree with that?
It is possible, but also remember there's also import effect as well. I mean, you're going to have every single competitor for any local producer is going to be cheaper. Okay, if you're making shoes overseas, and the Chinese are saying they're not going to basically renew that agreement with us in terms of the textiles, etc. That means basically not only are our local producers going to face more competition, but they're also going to face more competition at a lower price as well. The Chinese are basically hooking themselves quite strongly to the rand, to the dollar. My mistake, not to the rand, but to the dollar. And therefore, if you look at it basically in that term, you're also going to find out importers, import substitution industries are going to be affected as well, not just the exporters.
When you take a look at the strength that we've seen coming through on the yen, we know that exporters get quite hard hits there as well. But taking into consideration that the dollar has been weakening quite significantly, do you think that this is going to, in fact, be a good thing for the US economy?
Actually, one of the things that people mentioned earlier on, and this is something that you should think about as well, is that the US borrows in dollars. Basically, it's going out and borrowing in dollars. It's not borrowing in yen, it's not borrowing in RMB, it's borrowing in dollars. And therefore, one of the easiest ways to get rid of a loan that you're borrowing in dollars is basically to weaken the dollar. And if you can weaken the dollar, I mean, because even though it's a bit conspiracy theory kind of statement, but I'm saying is that it's actually good for the US economy to have a weaker dollar. If the dollar fell a lot, all those loans become a much easier thing to handle.
Right, taking a look now at the CPI number that's set to be released next week, and of course we've got the MPC rate decision. Yesterday we had the South African Reserve Bank AGM. What do you think is going to come out of that meeting? Some say that we should expect half a basis point cut, 50 basis point cut, and others say that, of course, the South African Reserve Bank and the MPC very difficult to read and that don't usually give out clues. Yes,
I mean, after last time, I don't know if I'm willing to make a call on this. We're actually expecting basically maybe not another cut coming out because they may have blown up quite a bit of ammunition in the last cut. Maybe they might be waiting a bit longer, etc., etc. That being said, the stronger rand is going to help us in terms of inflation, and that's good for the Reserve Bank actually. Petrol prices are probably going to come down the next month. Petrol price is probably going to be a bit which was lower than the current months. That's going to help with inflation. That being said, I'm not going to make a call on it.
I thought you were quite brave. Taking a look now at the economic data that we've seen coming out of the US, manufacturing doing far better. We've got industrial production higher as well, and this all causing quite a lot of positive sentiment in the US. And of course, all eyes are still on that housing market, and it is starting to show signs of recovery, but we've got to take into consideration as well that it is coming off a relatively low base.
Yes. a concept I've been hearing about for the last few weeks is the idea that there's not now a consumer crisis, rather. What's happened is that there's been a switch turned on or off, whatever, in the US consumer's brain in terms of spending. So he's now going to be looking more at saving than he's at spending. And so even though we might see a bottoming out, you aren't going to see the same kind of spending we saw in the past, be it on houses or cars or whatever, because US consumer was actually spending more than he was earning, and that was just unsustainable in the long term. And so therefore he has to basically start saving more than he spends. And that switch has to be switched on at some point in time, because an economy or a person, less like a person, can't go out and spend more than they earn every single month forever and ever and ever. They've, at one point in time, got to pay off those debts, and they basically got to reduce their spending to be more in line with their earnings. In fact, because they spent more earlier on, they've got to reduce it beyond where they normally should be. So that has to happen. The US consumer has to rebalance his balance sheet. He's lost trillions of dollars in terms of housing wealth, and that has to feed through the economy at some point in time. So even though we are seeing a bottoming out, I don't think we'll ever see not ever, but I don't think we're going to see the levels we saw in terms of the housing market, etc., a few years ago coming back again.
So just very quickly, where do you think the markets are going to be going from here? Because we are breaching key technical levels globally.
Actually, we at the office, we had a little bit of bet a month or so ago, and I said we'll probably see 20,000 before we see 25,000. And I might just be wrong. I mean, we might just hit another higher level, but I do think we're due for a pullback at least, a couple thousand points. I would think so.